What we've already seen is really an event that we tend to see maybe 2 or 3 times a year. So we're already there in terms of that extreme oversold condition, and it's across the board. It's not just in that small and mid-cap benchmark arena, but in the S&P 500, we have about 60% of the stocks in there are oversold from a short-term perspective, and only 11% right now are above their 50-day moving averages. It's very rare to see those kinds of extremes, especially associated with extremes in market sentiment, which went from overly bullish in late August to now already overly bearish. So I think it tees up the market for a nice recovery, and very quickly, too, next week even. Because
we see a lot of times we think it's not just how deep a correction goes, but how long it takes. You're not dating it from just the last 2 sessions. How far back do you go to where this actually started with some like a stealth correction in some of the names that maybe we don't follow quite as closely? Is this 3 weeks old? Is it a month old? How old is it?
Yeah, about 3 weeks to a month. If you look at the Russell 2000 index as a benchmark, it's really when its correction began that this rotational pullback was already underway. And that's why the oversold readings are already so extreme just after a couple of days of extreme downside price action. Believe it or not, with the downside that we've seen, there's not a lot of breakdowns on the charts. And I always tell people that, to me, the market is broken when you have a lot of stocks breaking support levels, and we just don't have that this time around. The stocks that have broken down are the laggards. It's the stocks that are in long-term downtrends and already are trading out of line with the major indices.
Hey, Katie, earlier this week, what did your algorithm show you?
I don't have an algorithm per se. Really the risk to the market ahead of this week was really only sentiment. The sentiment does tend to peak ahead of the market by several weeks. So if you look back to that late August reading in sentiment, it did tee up the market for a pullback. By no means did I think we'd see the S&P 500 back below its 200-day moving average. But those 200-day moving averages do tend to act as cushions for the major indices. The Russell's testing it as well. So to me, I think we should see a little price action in here in the next couple of days, flirting with that 200-day moving average. And like before, or in past instances, we'll see it come back. The last time we've seen these readings that we have in the market internal measures was actually on February 9th, which was a good low for the market.